Thanks for tuning in to BloombergQuint with me, Niraj Shah, and my colleague Ira Dugal. Let's take you through the top headlines and the newsmakers on Heads Up with BloombergQuint. Global markets handover has been fairly solid. All three indices on the US bourses were in the green. Asia starting off on a mildly positive note. Technology and metal stocks have rallied in trade.
Bloomberg News reporting that Tata Motors is discussing, not a decision yet, but the listing of IPO of JLR may be once again on the table.
And more updates on the farm loan waivers. Punjab now joins the list. Over 8 lakh crores of farm loan waivers announced by the Punjab Chief Minister yesterday.
All right, and Lupin not in the best of health, says Credit Suisse in a note coming out.
All of this will be discussed and more on Heads Up. But Ira, the markets, well, remember we were talking about this yesterday, that it'll be more to the tune of the global markets that we will generate, because we don't have too many domestic cues coming in, aside of course banking and farm loan waivers and so on and so forth. But purely from a markets perspective, not too much. So we'll start off on a flattish note. The SGX Nifty is already indicating that because the handover from the global markets was not too bad. All three indices ending with the green. Technology led the rally. Look at what Nasdaq did in trade yesterday. Strong moves closing in at the day's highs, and almost all the tech stocks across the globe rallied. Now, does that mean that our stocks will rally? Difficult to say. But yeah, the handover was fairly solid. I think what did rally aside of technology was metals, and all the ADRs, be it the technology ADRs or the metal ADRs, ended in the green. So you probably believe that some of the metal names would start off on a positive note. Yes, metals did have a rally yesterday. Tata Steel was up about 3.5. So some part of it is baked in. But you will probably expect that with a flattish start or not a negative start coming from the SGX Nifty, you would have a positive start for our markets, 9, 10, 11 points as on the Nifty. But maybe technology and metals take center stage and move slightly ahead. And then time will tell. I think it's a disguised bull market. We have the mid caps and the small caps giving 10, 12, 15% rallies every single day. Today will probably not be any different.
That's on the metal side. You could see some bounce, but it's not something dramatic. I think 1.5% to 1% kind of gains on metal stocks overnight. So not a major move. Tata Motors may be back in the news. It's been, I think, 3 consecutive days we've been speaking of Tata Motors in some context or the other. There's more news coming in, I believe, from our colleagues at Bloomberg News, who have reported that the management of Tata Motors is discussing the possibility of listing JLR. A story that's been played out, I think, many times, but that's not to say that it can't be true this time around. Yatin's joining us with the news, and then we can take it forward. Yatin.
Morning, guys. Clearly, at this point in time, as Ira was pointing out, the news has been around for quite some time. In fact, a couple of years back, also it was reported that JLR is planning an IPO. Now, more importantly, why the IPO? We have a big capex lineup for Tata Motors when it comes to the JLR part of the business, and probably to fund that capex and probably investing into newer technologies, looking at unmanned vehicles, automatic cars, and cleaner cars, and probably that is a big investment. And probably at this point in time, if the fund requirement is increasing or the capex outlay is increasing, it probably will make sense for the management to come out with an IPO. But at this point in time, the Tata management, Tata Motors, have denied this particular news bit. But what we understand from the analyst community is that it is very important that the listing doesn't happen, given the fact that if the listing happens, probably there is nothing in the standalone business, which is probably incurring a loss of 1,000 crores a quarter, and probably the holding company discount once JLR lists separately for Tata Motors would be quite wide, and that will probably be a pain point for the shareholders of Tata Motors. Of course, JLR shareholders will be happy, but not great news for Tata Motors if the listing happens, probably because of the holding company discount. And remember, almost 95 to 98% of operating profits for Tata Motors comes in from JLR. So that bit, if that goes off, probably Tata Motors is nothing but a holding company moving forward.
I think that's the point, right? I mean,
surprises you?
No, it doesn't surprise me. I mean, the talk has been doing the rounds for a while, but I think the point has always been that what happens to the domestic operations. JLR has stabilized. JLR is doing very well. I think they've had some 7 consecutive years of sales growth. But Tata Motors' domestic operation has not stabilized. So you take out JLR into a separate entity. What do you do with the domestic operations? How does the market then look at the domestic operations? That's always been a big pain point. And they haven't gotten it right. I mean, they've tried, Yatin will probably know this better than me, but they've tried various strategies on the passenger car side at least, and they just haven't gotten it right.
Yeah, passenger side, or for that matter, the CV side as well. Somehow, I mean,
the CV side, it's been very cyclical. It's been a very disturbed business for a while. But passenger cars, they've tried a bunch of things, especially last year with new launches.
Despite the CV business being cyclical, companies like Ashok Leyland have turned around in that segment. So really, as the point made out, is that they have not been able to do much in the domestic business, be it the CV side or the passenger vehicle side. Of course, passenger vehicle, they have some recent launches which are doing well, but clearly, if you take out the cream, probably what you have is just peels for Tata Motors.
Yeah. So the simple point is what a dealer is saying, is the stock likely to start off lower today?
It's not about, see, basically the management clearly immediately came out with a clarification that they have strongly denied that the report that the IPO is coming out, but probably the market is a bit jittery. Last time when the news came around, the talks were that the holding company discount might widen, and that would lead to lower valuations for Tata Motors as a consolidated entity. So clearly the market is nervous. Probably we could see some bit of mild downtick in the initial open, but since the management has clarified, the market is taken the news lightly.
I think the story also very clearly says that they're discussing it, no decision has been made, and I think that's perfectly valid, right? I mean, at this stage of a business where the business has matured to a certain point, you have to start discussing the possibility of a listing. Then it comes down to the timing, whether the capex requirements require a IPO. In fact, if the capex is too high, you may choose not to go for an IPO right now. On the other hand, what happens to the domestic? So I think there are lots of concerns. Managements will in India will typically come and deny a lot of news.
Yeah, that's true. But just lastly, what this does is it makes, if this does indeed go through, it makes the cheapest Sensex stock, so to say, or the cheapest auto stock on the index even cheaper. Because if this goes through, there is no doubt in our minds that the stock will correct, and therefore a company which trades at single digit P multiples, a couple of year forward earnings, will become even cheaper. So that's not great news for a Tata Motors shareholder or the
nothing left. I mean, there's far lesser left in that company as well.
Yatin, thanks for joining in and giving us that perspective. So that's Ira and Yatin talking about Tata Motors and the impact thereof. Let's see what the impact is, to be honest. Keep in mind, we were also talking about how the tech and the metal stocks have rallied. It'll be very interesting to see what happens to technology, because there's a far cry between what NASDAQ does and what our own technology shares do. But speaking of exporters, the thing that I do want to point out is this Credit Suisse note on Lupin. And the reason why this assumes significance is twofold. One is that in the month of June, the Nifty Pharma Index has gained about 7 or 8%. We were talking about how June and July are great months for pharma. So there's been a bit of a rally. It's not sitting at dumpster levels. But this analyst got it very correct on Lupin when Lupin was trading in multi-year highs, and Credit Suisse came out with the note and said that they foresee downsides. Now, despite the fact that the stock is trading lower, then there's a bit of a rally that has happened in the pharma index. The key point that Credit Suisse is trying to make is that pricing will continue to remain under pressure. And that means, it doesn't mean that Lupin as a stock will correct massively from here, but if you're expecting some bit of a recovery in Lupin, that is unlikely to happen. You take note when the pharma analyst of Credit Suisse makes a point, not that it's different from what the others have made, but it's an interesting note because it's this particular analyst, and therefore let's wait and watch. Maybe this rally in pharma that we see in the month of June could be short-lived.
Okay, so we've got Lupin on our list of stocks to watch. We've got metals, we've got tech,
but we also have yes, and there are a couple of other stocks in news. But before we continue with that, Ira, there is also one more farm loan waiver.
Yeah, not
surprise.
Right? Unfortunately, not surprise. So Punjab had talked about it a while back. All these governments have been trying to work out the modalities. Not that we have too much of the modalities, but we've got another waiver being announced overnight. I'm just going to try and read out the numbers. So we've got about 8 lakh farmers that they're saying that are going to get covered by this, and I think they're looking at 2 lakhs, overall blanket for all farmers in terms of exemption. Those are the numbers. You can go to BloombergQuint.com to get more details on that story. But I think just like in all the other farm loan waivers, the big sort of gap in all of this is what is it going to cost the state government? Apart from UP, where you have a fix on the cost, in both Maharashtra and in Punjab, you don't have a fix on the cost. So what is the exact cost? And then you start to do the numbers in terms of what it means for the individual state fiscal deficits. And as this whole, I'm going to call it a menace, as it spreads, you have to try and then assess what the consolidated impact on deficit is going to be from a state perspective. And then all analysts are looking at state plus center deficit. So you have to look at, that consolidated impact. Niraj, I think, what is also happening is that all all analysts are now starting to make their estimates. So I think Bank of America Merrill Lynch is saying that by the time you get to 2019 elections, you'd have almost a 2% of GDP impact. But some of the other analysts are a little bit more conservative. Kotak had a report yesterday. They're saying about 0.5% to 1% of GDP is what the impact is going to be. The market, and here I mean the bond market, has not so much responded to this. So you haven't seen state bond yields start to move up significantly. It is that trigger that is important to watch. There has been a slight upside, and JP Morgan Sajid Chinoy had pointed out that over a period of a year or so, as state finances have weakened, there has been a slight increase in the spread between government securities, central and state. But do we see a spike in state government bond yields? Not so far. So that's what you want to watch. That's when the governments will come under pressure if the markets start to put that pressure.
So you reckon that could happen very, very soon?
It's very tough to tell because there is a lot of liquidity in the market. Unfortunately, that's helping these guys because there's so much liquidity. They're chasing whatever is coming into the market. So that's the story that's been playing out in terms of the farm loan waivers. It's a troubling story. It's a troubling story from the perspective of government finances. It's a troubling story from banks. Again, we know that this doesn't directly impact banks because banks get the money back. But the problem is what it does in terms of credit culture. It's very tough to pin down numbers here, but if you look at microfinance companies, small rural finance companies, and we spoke about this earlier in the week, they start to see some impact in terms of defaults. Banks start to get a little bit cautious in terms of incremental farm loan lending. It's very tough to pin down numbers on each of these, but we've seen this story play out in the past. It's not a new story.
Not a new story. Does this have the potency to become a norm, Ira?
Norm meaning we've already got 3 large states going in that direction. So to some extent, it's not a norm, but it's wide enough. It's not an isolated incident. Unlike say a Telangana, which had done, one state which had done an isolated waiver a year and a half back. These are now 3 large states that have gone in that direction. Will other states follow? Maybe. And I think what everybody said at the time of the UP elections was this, that if you have a state which is governed by the central, by the same party that is in power at the center, then it's very tough for this not to spread. Now, the central government on its part, and Arun Jaitley, the last time he was out in public, reporters asked him whether the central government would have any role to play in these farm loan waivers. He absolutely said no. But that doesn't help. Nobody looks at central and state finances differently anymore.
Sure.
It's all collated together.
Yeah, it is. So, well, all of these things are an issue, a potency of bigger issues in the making. Let's see. But the impact, as Ira said, not seen as well as yet on the bond yields. Maybe they'll come out at some point of time later. Actually, there is something more that we want to talk about as well, Ira.
On the farm sector.
On the farm sector as well. But just before that, since we are talking farm, agri, just important to get in the monsoon angle out here as well. And just wondering, I'm trying to play a bit with technology out here, or we are trying to play a bit with technology out here. Just trying to see if Jatin Singh of SkyMet can hear us. Jatin, can you hear us?
Yes.
Oh, brilliant. Good to have you. Good morning to you. Thanks so much for joining in. Now, the update as of last evening, Jatin, is that IMD has revised its second forecast slightly higher, 98% of the long range. I know, second forecast comes out, I think, in the month of July. But as of now, because we've had a few dry patches sitting in the metros, would you say that monsoon is normal, or would you believe that data needs to come out before you can confidently say that?
You see, the circumstances are pointing towards a normal right now. The El Nino is not happening. If you look at most models, they're showing an entry neutral position. That is the reason why in our first forecast, when we went in March, there was a very good chance of El Nino happening. So we had gone with 95% with a plus minus 5. Which also makes, so we at that point of thought that the monsoon is somewhere below subpar and normal. IMD has gone a step ahead. I think they made it 98 or 2%. They've gone from 96 to 98 because they probably think that they also want to cover maybe a probability of above average. I think June is going to finish normal. It's going to be weak if the next 4 or 5 days. It's only going to start raining around the 27th and mostly North India. So I think South and Central will be relatively dry until then. The region that affects India in the Pacific is the region 3.4. And that region is still about 0.4 or 0.5% above normal. So we still are sticking to 95 because, what you need generally for a successful monsoon is a total collapse of temperatures in that region. And I just want to see the impact that this kind of temperature spread over the Pacific has in the month of July, because June is really not that important. You've had plus 16% Junes with minus 14% over total monsoon rainfall. So if there is a dry spell in July, then there'll be a problem. If we are able to have this kind of rainfall in July, then we should be able to escape it. As in the rainfall that we had in the first 10 days of June.
Busy mornings, Jatin, won't take too much of your time, but the date to monitor is July mid-July. Would that be a good time to revisit this?
Yeah, we already have made space for a normal monsoon. Okay, we are on the edge, so it's 95 plus 5. We need something, we need to feel that there's something or data that something extraordinary might be happening. So
get your point. Jatin, thank you so much for joining us this very early morning on BloombergQuint and giving us that perspective. Really good of you to take the time out.
Thank you.
All right. So IMD revising its forecast higher. SkyMed believes that that could be a good idea to actually revisit this sometime in July and don't really pay too much of credence to this data that is coming out in June right now. Even if it's a great month of June, July could well disrupt the party. So let's wait and watch on that front. Now there are a couple of other stocks in news, but before that, since we're in the topic of agri and monsoon what's happening to government finances and state finances, there is an interesting story coming out of Pune. Municipal bonds.
It's a fabulous story. I know the stock markets don't care much about it, but the bond markets do. It's really fascinating. We've been in the country trying to get municipal bonds off the ground for a while.
How many have happened until now?
Hardly. There have been sporadic instances. I think the total is about 1,500 crore, less than 1,500 crore outstanding. Not even outstanding. That has been issued and then may have wound down. Pune is trying to restart. Actually, a lot of people are trying to. A lot of municipal corporations are trying to restart that process. The reason is that smart city projects need to be funded through part equity and part debt. The government has made that very clear. So these municipal corporations need to raise their own money to be able to fund some of these smart city projects. Pune was the first one to go to market yesterday. Small
first
issue,
one, okay.
First one in this tranche.
Okay.
200 crores, so not a large amount, but their overall borrowing program is 2,300 crore. But what is nice was that for that 200 crore, they got a 1,200 crore book. So they got a solid amount of money coming in. They got a decent yield of 759, I think less than 100 basis points above the comparable government securities. They had insurance companies, mutual funds, banks bidding. At least that's what we heard from the commissioner of the Pune Municipal Corporation. But if this picks up, I think it's good from just the development of a market.
Are global bodies allowed to invest in this? Or no?
Foreign investors can invest to the extent of the foreign investor limit.
Okay, I'm throwing this out of the blue, but any idea of whether foreign bodies did invest in Pune as well?
I didn't ask.
I said I'm throwing out of the blue.
It's foreign investors have been slightly tentative even towards state bonds. I would be surprised if there was a large interest. But if these pick up, surely you do have another option. So it was an interesting one. I'm going to play out a small comment from the commissioner of the Pune Municipal Corporation. We spoke to him yesterday. He's explaining the process that they had to go through and also the way they've structured this bond, which again for bond market people is very interesting because they have created an escrow account where the property tax money and some water charges are going to be put to ensure that there is greater predictability in terms of interest payments.
It has been a very interesting experience as a learning experience also for us. Because unless we go to the market, we really don't start thinking backwards in improving your financial strengths and the way we work within the organization. And that is a challenge to undertake. And therefore, the first time when you decide to go to the market, you have to decide to actually improve the style of functioning within the corporation. So we started about 6 months back, and then we kind of started shaping the bond issue and understanding how much money we wanted to raise. Incidentally, the money is being raised for the Pune water supply project, which is a 3,500 crore project, and we are going to raise 2,300 crores over the period of 5 years from the market, which is easily going to be the largest bond issue a municipal corporation will come out in this country. So this is the first tranche we have raised today of 200 crores and going through the processes. In fact, I would also like to compliment SBI Capital Services because they have been our merchant banker and they have really guided us well through this entire process. Also, all the investors, when we met them in the investor meet, they showed a really good intent and will to support this first issue, which is actually coming after approximately 14 years. And in fact, if you see the numbers, the total amount that has been subscribed for municipal bonds so far in India is around 1,094 crores. And today, as against the 200 crore issue, we actually got a subscription of 1,200 crores, which is higher than the entire amount which has been raised in the past. We've done a fairly good structured payment mechanism where this money from the property tax goes into a escrow account, as well as we've created a dedicated water account where user charges money goes into, and that then gets into the escrow account. So gradually, in the beginning, the property tax money is slightly higher, the user charges are going to increase over a period of time, which has also incidentally been decided by the municipal corporation. We have a 30-year tariff policy backing this entire project, so we know what is going to be the tariff in X year and Y year, and therefore that will subsequently, over a period of time, the property tax subsidy which is going into the escrow account will go on reducing, and user charges will go on taking over, and that's very well structured, and therefore I think the market has really appreciated that financial structuring. And moreover, with the help of so many other partnerships, like I would like to mention the partnership we have with the US Department of Treasury, with whom we are creating our debt management policy, our debt capacity analysis, and those documents have really given us the strength to manage debt better in our organization, and therefore we have been able to come out with this issue.
Well, so that's some money raised by the municipality of Pune, and there is some money that could be raised by people who are holding Crompton Greaves consumer, Ira, because there is a note that has come out from Goldman Sachs, and the upside is 30%. So you would expect that, for a mid-cap stock, Goldman Sachs, 30% upside, there could be some excitement around this one. They have initiated with a buy rating and a 30% target upside. They believe that it's well placed to benefit from premiumization and of the products, and they believe that even though the valuations are at a premium level, good things come at a premium. So they are very strong in the belief that Crompton Greaves consumer could benefit. Now, the only flip side to this story is that we've seen that as monies come in droves into the Indian markets and it's not showing any signs of ebbing, people are now slowly starting to look at the second rung of stocks and trying to find reasons as to why these stocks could move up. It could be a risky proposition. So you'll probably have a lot of these, large brokerages coming out with potential target upsides, taking in FY19 earnings into consideration for a lot of mid-cap names. That is not to say that CG Consumer is not a quality name. It could well benefit and all of that, but you'll probably see a lot of notes like this. The stocks will react, but just be careful before you go out and do your buying decisions out here.
Sure. There's also some news coming in on Fortis.
Yeah. So that's the interesting one, right? Yeah. If you jog our memory back, and I'm sure both you and I were commenting when Malvinder Singh struck that famous deal for Ranbaxy, nobody had an inkling, and well, it was a substantial upside to the ruling market price then. So what Mint is saying is that they are very close to this deal. Just one caveat, that I think this news has come in at least 5 times in the last 12 months. So it's not new news, but I think what Mint is trying to say is that they are very, very close to the deal. They have given some valuation numbers based on those parameters. There is some upside to the valuations of Fortis. I would presume that these guys are so soft in the dealings that if they indeed strike a deal, it could well be northwards of these upsides as well. You never know with Malvinder and Shivinder Singh, so that could well happen. It's a good fit. It's a great glove in a hand fit. So this may well happen. The only question is the timing, because as I said, we've seen this news story appear 6 times in the last 12 months.
Yeah, so I think everybody at least has been widely reported that they're in discussions.
Yeah.
Both on Fortis, SRL Health Diagnostics as well. They've actually, talking about Ranbaxy, they've had problem getting the kind of valuations that they demand because of what happened with Ranbaxy. So striking a deal has not been that easy for them. They've been in the market from what we read on a number of their ventures. So let's see, like you said, whether the deal actually finally does get struck or not. But I presume there'll be some market response.
So day's momentum today, I would believe that if there is a momentum, it should be just for a day, because until the deal is sealed, as you rightly said, because they've been trying to, until the deal is sealed, I think it'll be foolhardy to go out and think that these are the valuations. So let's wait and watch, is what I would presume an average investor should do.
Absolutely. Just before we close off, quick note, do go to BloombergQuint.com. We've got an exclusive story on the GST process that is continuing to roll out. Our colleague in Delhi, Nikunj, has reported some details on the anti-profiteering body and the way that, that sort of profiteering story will be tackled. And they're saying that there is going to be an 18% interest added on to the excess profit that a manufacturer or trader is said to have made. So those details are available on BloombergQuint.com. Go do read that story. Daily coverage here, Niraj, on GST and how it's playing out. We are less than 15 days away.
As important and as big as this can get, for sure.
Absolutely.
Yeah. So Market opening or pre-open happening in the next 5 minutes. The SGX Nifty is indicating a slightly positive start. So have a good day, have a happy trading day, and tune in at 9:30 on the very same forum to hear out our research team tell you all about what's happening in the markets. Thanks so much for watching Heads Up.